Well, we are starting in Germany, where the outgoing parliament has approved a plan to break with generations of tradition and amend the constitution to allow for borrowing of up to €1 trillion to spend on defence and infrastructure. The Chancellor in waiting, Friedrich Merz, comfortably secured the necessary two-thirds majority to overturn decades of fiscal conservatism. The upper house of Parliament will have its say on Friday. The German economy has been in recession and faces the challenge of spending much more money on defence. Well, Andrew Kenningham is Chief Europe Economist at Capital Economics and joins me now. Thanks for being with us today, Andrew. It is a seismic vote. From an economic perspective, leaving aside the defence concerns, what difference will it make for Germany?
Well, I think it's something that many economists have been hoping would happen for many, many years. And Germany is unusual, as you were saying, in having this very strict approach to fiscal policy, particularly since the global financial crisis. So they were unable to spend, and they ended up, particularly cutting back on spending on investment. So that frees up money for infrastructure investment to get the railways running on time, to improve the digital infrastructure and so on, which should boost growth in the short term and might edge up the sort of trend growth rate in the long run. There's also all the defence spending, and we've seen defence stocks go up, and I think there'll be a lot of activity in the German and wider European defence industry over the next year or two.
It is often described as Europe's powerhouse economy. It has been a drag on growth in the Eurozone for the past couple of years now. Could this change also raise the fortunes of the wider EU economy too?
Well, we think that for Germany itself, it'll probably lift GDP by around 0.5% or so next year. So it's an improvement, but not a complete game changer. Other European countries are not going to do anything like as much. Even those that would like to boost defence spending haven't got the fiscal room because they're worried about their borrowing costs. So I think there'll be much less from other countries, and the overall impact on the European Union and the Eurozone will be, much more modest.
Culturally, historically, Germany's been very fiscally conservative. During the whole Eurozone debt crisis, there was a lot of consternation, culture clashes between Germany and Greece over their attitude to borrowing. But I wonder, could we now see a situation in which bond markets begin to raise red flags about German government borrowing?
No, I think that's really not going to happen. Even accounting for quite a big increase in borrowing in the next few years, Germany's debt ratio will remain much lower than those of France or the UK or Italy, for example. So that's not really being brought into question at this point. What might happen also is Germany might have to be a little bit more relaxed about higher borrowing from other European countries. And it'd be interesting to see how markets react to that. If, for example, France were to try and increase its defence spending with increased borrowing, markets might not take it quite so well.
OK, Andrew Kenningham from Capital Economics, thank you for joining us with that analysis.